It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Yeah, so after we did the joint venture with our friends, I saw a post on a Facebook group from someone who lived in Melbourne saying that they had a house they needed to renovate where I lived. So I reached out to them and I said, hey, if I run your renovation project, I think we can make you way more than you think. And we renovated the house for them. We made them way more money than they thought. So we split every dollar over the top price they thought they could achieve.
And that is Victoria in Queensland this morning, who is going to join us. And welcome back to another episode, your largest property podcast library in Australia. Yes, over 1,000 episodes for you to surf through as we talk property from Mackay to Geelong. And you can stream us on multiple platforms, including Apple Podcasts and Amazon. Well, it's a Wednesday morning. It is the 16th of April. And just 5 years ago, Victoria Pinterit was working at Bunnings while studying interior design and construction. Now, since then, she's faced job losses, a failed subdivision investment, and the challenge of moving back into a rental. But through home renovations, and I would say what is an unshakable grit, Victoria and her partner Roger have turned their setbacks into success. And today they both run a bar and a property business, proving that resilience and vision really can transform even the toughest lows into entrepreneurial triumphs and spirit. And let's welcome Victoria onto the Real Estate Breakfast this morning. Nice to have you with us, Victoria. First off, I want to ask you about the failed subdivision, because I understand you lost $100,000.
Yeah, so we renovated our first house and then we had money from that, but we were really struggling to buy another house again because the market was booming so much. So we thought, we'll invest this into this person's subdivision deal. And it was an amazing deal. It was a 1:5 in Coorparoo, and the numbers were just stunning and beautiful. But unfortunately, the developer wasn't very good at project managing and ended up going into bankruptcy. So we lost $100,000.
Now, for our first home buyers that are looking at buying perhaps a section, what would you tell them not to do in your situation?
I would probably just not hand my money away again. I would buy something myself and look after the money myself.
Was this a deposit that you were paying? How did it get to $100,000?
No, so it was a developer doing a subdivision deal and we were investing in their project.
Right,
and
okay.
Expecting like a return. So we were investing for a year, but unfortunately a year turned into 2 years, 3 years, and then the holding costs ate away at their project and they had to sell.
So take us a little bit back to 2021. You were, as I understand it, you were priced out of Brisbane. Then I think you made a move to Victoria. No, did you move to Victoria? Am I getting that right?
So in 2021, while this money was invested, we were working again, saving up, and then we still couldn't find anywhere in Brisbane within our price point. We looked at buying in Ipswich. I had a boss at that stage who back in the day bought houses in Byron Bay and West End for only $100,000. And he said, have you looked at Ipswich? And I drove out there the next day because I knew that this man knew what he was talking about.
Yeah, and so then you're having a look around Ipswich and you're going, maybe we can do a couple of property flips. Is that what happened?
Yeah, so at that point in time, I was doing feasibilities and all the deals were stacking up and it looked like there would be tiny profits. It was all we could afford at the time. So we took the risk and bought our first deal out there and made almost 4 times as much profit as we thought we would from our feasibility.
Okay, so what happens next after that?
We were doing the flips ourselves. making good money. Sometimes you do it and you put in so much hard work and you barely make any money as well because, costs can blow out. It might sell for less than you expect. We did quite a few, and then we had some friends that wanted to do a flip, but they didn't have the time. So we did a joint venture with them. They bought the house and then we renovated it and then we split the profits with them.
That's a really sort of tricky one to do, particularly with friends. Did you have that sort of watertight in terms of a contract to make sure everybody knew what was, the expectation on selling?
Yeah, we did. We had our roles written down and had it all signed off by a lawyer. It was really good and really, really fun, actually. Like, it was so much more fun than doing it without them because every weekend they would come and see the property and we could teach them so much with our construction and design knowledge, and they were learning so much, and it was a really, really great project.
And then after that, as I understand it, you were flown into Melbourne to help with a new build. What was that?
Yeah, so after we did the joint venture with our friends, I saw a post on a Facebook group from someone who lived in Melbourne saying that they had a house they needed to renovate where I lived. So I reached out to them and I said, hey, if I run your renovation project, I think we can make you way more than you think. And we renovated the house for them. We made them way more money than they thought. So we split every dollar over the top price they thought they could achieve. And they were so happy that they flew me down to Melbourne for the day to pick finishes for their new build, which they were trying to maximise the value of because that was a development. And it was so much fun.
So you go down to Melbourne, you do that project, you did the reno with your friends. I'm sensing that there could be some investors listening to you this morning, Victoria, thinking, well, I've got a property. I don't particularly want to project manage it, or I don't want to renovate it myself. You might be interested in taking some calls.
Yeah, definitely. So our business is called Urban Uplift, and we help sellers to figure out what they should do to their house to sell it for more, to maximise appeal.
Now let's go from all of that into you deciding to go into the hospitality business with your partner, Roger. You reinvested some of these renovation profits, etc., into a boutique wine bar in Ipswich. You're a busy person, Victoria.
Yeah, so after moving out here, we realised there was nowhere to go. So we came across a lease for a beautiful heritage building. It's all exposed brick beams and a beautiful laneway, and we couldn't not take up the opportunity. So now we own a wine bar, and that's probably been the most challenging project of them all. It makes renovating look easy.
So what were some of the real challenges for getting this wine bar up? Because obviously a full fit out and renovation by yourself and your partner.
So the fit out and reno was the easy part because that's what we're good at. But it was curating all the menus, finding the team, the marketing, the branding, and just the day-to-day operations of having a big team to manage for the first time in my life.
And how long have you been operating the wine bar and restaurant?
The wine bar opened at the end of December 2023, and it's been my main focus. But now I'm shifting my focus back to Urban Uplift so that I can help sellers sell their house for what they deserve.
Well, it's been quite a property journey for you. You know, it might have been very difficult 5 years ago when you were thinking, gee, how on earth are we going to get into the property market? But there's a steely determination, no doubt about that, particularly losing $100,000 on a failed development. A lot of people might just sort of pack up their kit after that and sort of play it a little bit more safer and say, well, I've learned a lesson there. I'm not so interested in going out on my own. But you persevered, and well done for that.
Thank you. It was my passion for design and heritage homes that really drove me through this. Seeing all the Queenslanders out in Ipswich, I just really wanted to work on them and restore them and bring them back to life again. And that probably was the main driver for all of this. It wasn't money, it was just the love for heritage homes and interior design.
Now, back to the potential investors having a listen, what would be your ideal sort of job? So somebody calls you up. What would that phone call look like if it ticked all of the boxes that you'd love to do in terms of a renovation or a project build? Is anything coming to mind?
So my ideal client to help would be somebody with a vacant property, ideally with beach views, and ideally built maybe in the 80s, 90s or early 2000s.
And then you just put your magic right across it.
Yeah, I just do comparable sales, market research, feasibility, design, and if required, we could project manage it for them as well.
Well, it's a great story of determination, Victoria. Thanks so much for coming on to the Real Estate Breakfast this morning and sharing your story, your ups and downs. And we're now at the high point. And if anybody is passing through Ipswich, you've got to check out, is it called Monty Lane?
Yeah, Monty Lane.
All right, so go in and say, hey, is Victoria around? I heard you on the Real Estate Breakfast. Hey, great to chat. Enjoy your day. Good luck out there in Ipswich.
Thanks for having me.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights. Ready to take your real estate knowledge to the next level? So are we.
Yeah, these numbers are pretty interesting. If you look at Sydney and Melbourne, they're expected to benefit the most from rate cuts. In fact, you guys broke this down. Some suburbs like Leichhardt have historically seen house values jump by 19% following a 1% cash rate drop. So again, tell us a little bit more about that.
Sure. So the most sensitive markets to cash rate changes tend to be in Sydney and Melbourne, and they tend to be pricier parts of those cities as well, potentially because people have to go into more debt to buy into expensive markets. So the cash rate is obviously a big influence there. And for a lot of these markets in Sydney and Melbourne as well, they have a relatively high concentration of investment activity, high wealth and high income individuals buy into these markets. So with the cash rate and mortgage rates determining the holding costs and return on investment properties, it can be a big influence as well. For an area like Leichhardt, we see that values are also more sensitive to rates going up, as we've seen in the past couple of years, where values are down about 7% from their recent high. That also stands to make them more likely to benefit from a cash rate reduction.
Remember, we are not a real estate company. We are 100% all about increasing your awareness and knowledge for buying and selling properties.
Buyers are definitely out in force, and if we see more rate cuts, there's only going to be more lending and more money, and I think it's going to be a very interesting 12 to 24 months in real estate if we see those further cuts.
On top of that, we've got the Trump craziness around the trade wars, that potentially the rate cuts could come down. I think there's also the potential that it could go the other way. I don't think it's an absolute given, because if it starts to affect the economy, who knows?
Yeah, so it is interesting. I suppose, like anything, if it's unknown territory, it's unknown what's going to happen. They have been talking about a double cut for the month of May. Whenever there's uncertainty in the worldwide economy, think back to COVID times, I guess there is that level of it could go either way. But for the most part, what we're hearing in the media, I think it's sounding pretty promising for purchases right now, and with rate cuts and things like that.
We connect you to the best real estate information across Australia. The Real Estate Podcast.